Hey, what's up, guys? I'm here outside, sir, which you might recognize from that terrible show, Vanderpump Rules. Wanting to update you, I was just walking with my trusty Dusty. It gave me some energy so that I could make this video. A lot of day traders have been suffering a lot of pain. I know the consensus trade has been to be in the FANG names, and for those of you, if I haven't mentioned before, FANG is Facebook, Amazon, Apple, Netflix, Google. So some of them have gotten hit harder in this last week or so than others, and I'll quickly explain. So basically, you had some of, so basically there's two things going on. Rotation, which I talked about before, it's like rotating out of like tech and into the reopen trade. So that's why often you'll see American Airlines and Carnival Cruises, Uber, all those stocks are up. And then you'll see, you'll see the winners, the big winners of last year, which it is attributed to investors were chasing growth. It was the only area that there could be growth in was tech during COVID, so everybody just chased that. And I have to admit, I did watch Amazon go up 50% over the year. I mean, that's a pretty massive move. But all that to say, those winners are now being used to fund the other names, the reopen or the value stocks. The big growth names are being used to fund the value stocks right now. So there are a lot of buying opportunities out there in the market. However, the other thing that's going on, and what you might be seeing is, I'm just going to take this down for a second. The other thing that you might be seeing is everything, right now the market's tethered to the 10-year bond, the US 10-year. So, and that basically is showing, interest rates right now. So the level was at 1.5%. If interest rates in the 10-year, if the 10-year reflects at 1.5% interest rates, that's higher interest rates. That means growth stocks are the most sensitive to that. So then they're going to sell off for that reason as well. So you've got the rotation trade, and then you also have, the fact that growth stocks, their valuations are just worse, obviously with higher interest rates. It's harder to grow, and they're, it's just not, it's going to hinder it all over across the board. That's what I mean. When you have inflation, that's why they raise interest rates, because they want business to come in so that you can squash the inflation, bring it down. So that's the same thing. So so those stocks are going to get hit on the back of higher interest rates. And if you watch the market every day, as soon as it goes up above it was approaching 1.5%, the 10-year. As soon as it went above that, you start seeing the market sell off overall. So to recap, you're seeing a rotation. So there's two market dynamics going on right now. There's the rotation from the big growth winners of last year into the ones that were more beaten up: cruise lines, airlines, travel names, service names, hotels, all that. Okay, then you have, when the market is getting a little bit worried about interest rates going too high, you have just a general market sell-off. So there's been stuff that explains why you'll see the often days you'll see a bunch of stocks on the green, bunch of red, and then the last couple of days, like yesterday was after Jerome Powell spoke. They were hoping that the federal chairman, they were hoping that he would actually say something that would basically alleviate or calm the fears of the investors who were worried about this, rising interest rates. And, all he said was, did catch his attention. And that was enough to send the markets in like a downward spiral, because then it was like, okay, let's sell across the board. Higher interest rates obviously means contraction. But you know what? We know the Fed is going to do everything in its power to keep the market up, to keep everything up. We're not going to lose all these tech names. I think it's a huge buying opportunity. I think you can get, especially names like Apple. I mean, my biggest position is still Boeing, even though that's not one of the ones that got beaten up. My biggest position is still Boeing. I think Boeing is a safe bet. I got upgraded today. I think, at the end of the day, Alibaba is still one of my favorite positions. PayPal and Zoom. Zoom had a blowout quarter, so did PayPal. They've both gotten crushed. So I would say, look at those stocks. Amazon's always a good bet. Amazon's now below 3,000. But Apple around, 120 here is an amazing investment. I mean, Apple is just doing gangbusters, and they have so many, the revenue streams from like service. I mean, that's growing, but also they're selling so much more sort of, laptop or desktop computers like iMacs and such, and even more smartphones like iPads. So anyway, those are the stocks that because they're tried and true. Facebook looks really, really cheap. What else? I mean, Twitter's come off from the highs. I think Twitter got to 80, was back down to 67. Get into those stocks. NVIDIA, NXPI, get into those stocks. Those are semiconductors. Adobe, they've all gotten crushed and they're not going anywhere. And they're still, they're going to grow in good times and bad. All right, that's it. I don't even think I introduced myself. I am the real day trader of Beverly Hills in West Hollywood in front of Sir that I don't even know if it's open. There it is. And I just wanted to make a video that might just help people understand what's going on right now. So keep your eye on the 10-year, and that if that keeps going up, that's going to be a problem. But at some point people are going to come in and buy the 10-year, and that'll take obviously when you buy a bond, the yield comes lower. That's it. Goodbye and good luck, and yeah, catch you next time from the Bro Pit. Please hit subscribe. We need 20 more subscribers.